morning, good afternoon to all the people that are joining. It's a pleasure to see you here today. And we're going to have a very good and exciting conversation that we are also recording. So for people that are missing the starts and also missing the webinars, I'm sure you'll be able to come later and have a look at that. And it's a very interesting topic because, we've been talking a lot about energy access having an impact on the economy, right? And that's something that's almost taken for granted and accepted. And I believe many people accept it now. But how can we really demonstrate that there is a relationship between the two, right? So this is what we're going to be talking about today, because I think for one, we're going to be looking at that in a little bit more into detail and giving. Okay, so yeah, gives some. You can hear me, right? Just checking. Yeah. Okay, good.
Yes.
You hear me? So yeah. So how do you connect the two, right? So how is not having access to electricity can affect your economy, or vice versa, right? So what is happening there? This is really the information that we want to impact today, and I'm actually very excited because we have two very distinguished speakers that will intervene and will talk about it with me, so that we can all unfold it, yeah, and share with you the few insights that we have, so that you can properly understand it. So the way we're going to run the conversation very simple. So I'm just going to give the mic to my colleagues in a minute, so they introduce themselves. After that, we're going to have a presentation that takes you around a range of topics, and then once we've gone around that, so we're also going to open the floor for the conversation. So I'm just gonna pass on now to Rongai. So Rongai, are you able to you should be able to unmute. I think Shingi also should be able to unmute. If yes, can you introduce yourself very briefly, and then I have Shingi doing the same as well.
Well, thank you, and good evening, colleagues across the globe, and good afternoon in some of your contexts. It could be during the day. My name is Rongai Chizema. I'm an economist by training, and I've more than 28 years in the field of economics consultants, provide independent economics consultants covering a number of issues in trade, development, and economic management. I also have a small outfit, which is EcoTrade, which provides very good solutions on economic research. And this evening, I'm available to do a deep dive and share with you thoughts on how electricity is very important in driving economic growth in the continent. Thank you very much.
Excellent for that. Shingi, can you speak, or let me know?
Yes.
Okay.
Can everybody hear me?
Yep. All good.
Okay, perfect. Yeah, my name is Shingai Samudzi. I'm the managing director of Asoba DeFi. So we focus on exclusively solar development for both commercial and industrial users across Southern Africa. I also have a background in commercial and industrial solar development here in the United States, where I'm based. I work with large commercial real estate asset managers to electrify their portfolios in a more programmatic way, specifically with solar. And beyond that, I have over a decade in corporate strategy and corporate finance. So a deep background in creative financing, applying it to the energy industry to both address climate change, but also just to attack some of the significant issues with regards to funding that we'll talk through in this presentation.
Okay, that's fine. Excellent. So as you can see, we are very fine gentlemen to talk about this issue. And then I think, without further ado, because I definitely would like us to explore a number of areas here, so that we're going to go through. And I'm just going to say as well to the people who are attending, please don't hesitate to actually share your questions, because we are here to respond and address your question, right? Because this is a topic that we've talked among ourselves many times already, right? And I would say what we're going to share, we already have the information, but the idea is for us to share that with you, So it'd be very great if you can actually ask your questions and then make sure that we can, I can take that on board. And what I'm gonna do, I'm just gonna make sure that pick up your questions. At the moment, you can't speak because you muted, but I will read your question and I bring that to the forefront. And I'm also gonna see if we got some questions on Facebook, because we live on Facebook today, and then we take it forward. So Rongai, I think you had a very interesting point that you wanted sort of allowing us to have an eagle-eye view as to how the continent actually sits and what are the big, I would say, the big aspect to look at. So I would be very happy if you can please talk about that and take us through, if that's okay.
Then I'm just going to zoom everywhere. Can everybody see the screen?
Yeah, we can see that.
Full
Yeah.
screen?
So are you going to run
Okay.
the slide for Rongai?
Yeah. Although Rongai, do you have the ability to actually? I'll just move it along as you speak.
Okay, gotcha. Okay, let's go. Rongai, you're on mute.
Excellent. Thank you. Thank you, Shingi. And thank you, Tony. I think what's very good is to set the tone and have a good context before we delve into the whole intricacies of the linkage between energy and growth in the continent. What's more critical is we should appreciate that we are coming out of a very important depression induced by COVID. And you'd appreciate that many people have been left out in poverty because of the negative impacts of COVID. And at a global scale, this recession has been at a very high proportion, which I think in man's living history, no one would have even ever contemplated. And for the African scenario, it's even worse, exposing close to 39 million people. And if you want to look at the numbers, the stats, you probably see that Africa actually had to endure a 2.1% GDP decline in 2020. In 2021, there is actually very good prospects for a rebound, which have been hinged on the loosening of most of the COVID restrictions, and projections and estimations have been pegged at about 3.4%. You probably find that a lot has happened also in the interim. We're seeing prospects as commodity prices have been recovering, a relaxation in stringent pandemic measures, and in overall, the global trade spin-offs are also starting to seep in as supply chains are slowly beginning to be put back on stream. And if you look at prospects going forward, for the continent, we'll probably be looking at a growth trajectory of close to 4% into 2023, according to the World Bank. But when you look at the continent, you will appreciate that also we have very serious demographic challenges, and our population is expanding. And by 2050, we'll probably be sitting on about, 1 billion people. And this puts a lot of pressure on resources, and this puts a lot of pressure on expectations, puts a lot of pressure on the dynamics of economic development in the continent. You also see high-scale urbanization growth, high-scale growth in expectations of the middle class, as urbanization has also been taking a spike. And if you do your numbers again, you see probably by 2025, thereabout, 2050, you'll probably be seeing close to about 1 billion people expected to be living in cities. And that's a number we cannot take for granted. How do we provide infrastructure to such a very huge population spike? But in the whole milieu of this discussion, we need to appreciate that Africa is positioned for a major economic rebound going forward, because the Africa Continental Free Trade Area, which has come on board and came on stream in January 2021, will open up market space for close to 1.27 consumers, 1.27 billion consumers in the continent, and unleash 3 trillion GDP potential. And that liberal market potential is underpinned by infrastructure, and energy becomes a very important variable in delivering the requisite trade capacity and industrial production capacity. While we appreciate that the Continental Free Trade Area is very important, I think you want to appreciate that energy is what is needed to fuel the Africa Continental Free Trade Area. So we can't really underestimate the issue of electricity when we talk about the Africa Continental Free Trade Area. The challenge we still find ourselves caught up in as a continent is that we still face quite very huge energy supply bottlenecks, right? And you find that one of the biggest challenges we also face is just the cost of access to energy itself. And in a scenario where we don't have adequate energy supply capacity, we easily can lose between 2 and 4% of GDP annually. And you know what I'm talking about. This then creates a lot of pressure in terms of job creation, in terms of inclusive growth going forward. And under such a scenario, we don't see our chances of meeting some of the SDGs 2030 targets, which we have already set ourselves towards. So we actually need energy one way or the other to buoy and support the economic transformation the continent so yearns for. And when you look at energy access, this is the most worrying statistic I can ever share. Currently, 37% of Africans only have access to energy. When you compare this figure with other regions in the world, you find that we are so far below the belt in terms of our energy availability. And only 24 countries, right, have at least some electricity access, which is around below 50%. And this is quite worrisome in the continent as we go forward. You find that close to 600 million people in Africa do not even have any access to electricity at all, right? And when you just do your small sampling and trying to look at statistics provided by UNECA in one of their recent reports, you find that some countries have actually stagnated in their access to power. You have Liberia, Malawi, Central African Republic, Burundi, and South Sudan. And you have even big countries like your Nigeria, your Ethiopia, actually having the biggest electricity access deficits in the continent. And the challenge with energy deficits is that they reinforce poverty. And the challenge with poverty in an African context is that especially women become even more vulnerable. And if you do a zero-sum game, you probably find that the poor are actually the ones who are paying even more for energy access. And bottom line is there's quite a huge demand for energy in the continent, right? And we expect this demand to actually rise as we go into 2050. And this has put quite a lot of pressure on public sector and private sector in trying to figure out how best to address this, because it then creates a lot of pressure on funding, it creates a lot of pressure on project programming. And so the bottom line is an area we need to watch if GDP is to go up. And one important issue we also need to be quite wary of when we think about energy in the continent is that unless we begin to think strategically about dealing with future energy supply and take strategic decisions around investment towards sustainable solutions to deliver electricity, we really run the risk of not being able to deliver on Agenda 2063, which aims to create the Africa we want. And if you just do a small review of the current costs of energy, you find that onshore wind costs close to about $59 per megawatt. Your solar PVs, about $79 per megawatt. And the cost of coal is about $109 per megawatt. In natural gas, about $74 per megawatt. And Africa still has challenges with production costs and transmission and distribution losses, which range in between 18 and 25%. And you can imagine if this energy was taken back into the grid, what impact it would trigger on the stability of energy supply. You see, so when you look at these statistics just coming up, you find that as much as we host 15% of the world's population, right? We don't have the requisite infrastructure and, more importantly, energy to cover the expectation of such a very huge population going forward. And this is quite a very big strain on the future growth trajectory of the continent. You also want to look at the energy consumption per capita across the continent. You probably find that we're also in a scenario where we are far below the belt when you look at other colleagues. And also, if you look closely at our situation in terms of resource basis, apparently we actually host the top 5 countries which are part of the bigger 30 oil producing countries in the world. And we've got also much reserves in terms of gas, right? So we don't actually have an excuse for not being able to tap into all these resources to rectify our energy balance, right? And when you also go further to look at what is really happening to the current reserves we have of oil, you find that most of our countries in the continent are surviving on 70% of their exports coming from oil and gas exports, you see. So this is the dilemma we face as a continent, that we are rich in resource, but we are not tapping into this resource. So we're actually foregoing a very strong potential to rectify our energy supply bottlenecks. That graphic just tries to give you an atlas of where Africa is in terms of energy, right? And it tries just to bring up much closer to the surface the stark realities we have on the ground. And with such a scenario, you'll probably find that the potential to deal with the current challenges we have is quite apparent. And we just need to tap into it, you know, to de-gridlock Africa from the current energy challenges we're facing. The next graph just tries to demonstrate the extent to which our situation on the ground is compared to a situation, say, in Europe. For instance, just pick up one small example. A kettle boiled twice a day by a family in Britain uses 5 times as much electricity as a Malian uses per year, right? You just take a Tanzanian, for instance. It takes 8 years to consume as much electricity as an American consumes in just a month. And these are not statistics just to take for granted. An Ethiopian takes close to 87 times longer to consume 150 kilowatts than someone in the UK. And this is coming out from the World Economic Forum. So these are quite glaring disparities which demonstrate and amplify the extent to which the issue of energy is an issue to the continent. In this slide, we're just trying to unpack the mere drama, which is revealed by the fact that in our situation, the issues of lack of access to electricity is quite dire, right? And the challenge you actually face going forward is that most of the people then just resort to using biomass such as firewood and charcoal as an option. But you know, the environmental impact of that, you know, we talk about climate change, we talk about issues of carbon offsetting, and this is very important issues. They put a brake on the sustainability of the development process itself, unless they are checked, you know. And so what are we saying when we go forward in this debate? It's an irony that Africa actually has got the highest bioenergy potential. For instance, when you look at our agricultural residues, you know, in comparison to other regions in the world. And ironically, also, we also have the richest solar resources on the planet, you know. We actually have the potential of close to 5 gigawatts of solar photovoltaics, you know. And we also have even the biggest natural gas, reserves in the world. I mean, close to over 7% of the entire world as portfolio of natural gas. And yet, this is a very important entry point for carbon-free economy. Development prospects going forward. And so, what do we need to do? We basically need to invest in electricity infrastructure and diversify the energy balance going forward, and embrace modern renewables. You know, a lot has already been happening in the continent. We have countries like South Africa taking quite a huge lead in this space of renewable energy. We also have other countries like Ethiopia, Kenya, Morocco, and Rwanda that actually have taken quite a very huge investment build up in this space of renewable energy. And so we actually still host quite a lot of untapped potential in natural gas in the continent, even hydropower. You will be aware that when we talk of DRC, for instance, right? The Inga Dam, the potential it has. And the Congo River itself actually has got a water flow of 40,000 megaliters per day, giving the continent or Congo an advantage to produce close to 100,000 megawatts. So actually Congo on its own can actually power the continent if you look at it. But we are under investing, we are under tapping, we are not taking advantage of this great, huge hydro potential in the continent. The very interesting thing about the African Continental Free Trade Area is that this demonstrates political will. And as we speak today, on the 28th of February, we now have 42 ratifications, right? Which is just a pale shade away from the 54 countries in the continent. So we're actually on track. So politically, we are there. But this might remain a pipe dream unless we address energy constraints. And so I'll pause here and then say, without energy, we can't power the continent. Without energy, we can't power the industrialization the continent so much needs. And without power, the economic trajectory we project to deliver in Africa we want by 2063 will remain a pipe dream. So energy is at the center of all this debate. The nexus between electricity, energy, and Africa's development cannot be underplayed if we're going to unlock the benefits the continent actually so much is sitting on in terms of implementing, for instance, the Africa Continental Free Trade Area and uplifting people from poverty going forward.
So transitioning from this macro level view to looking out on the ground, I think it's going to be helpful to better understand some of the specific obstacles that we're facing and what they look like country to country, just from a more, maybe from a more visceral or on the ground perspective. So, my perspective with ASOBA, given that we look at commercial and industrial solar, is focusing on some of the challenges that are specific to commercial and industrial users. Since generally speaking, commercial buildings, industrial purposes like mining or manufacturing consume the vast majority of electricity that we're targeting. I mean, if you saw some of the examples that that Rongai provided, we see that typical household use on a per household basis is very small. And if you look at the volume of use by mining purposes, by industrials or by commercial buildings, right? That's where you're really going to see the impact of the use and the impact of the lack of accessibility or availability. That's critically where the actual suppression of GDP potential is most realized or most directly realized. And so one of the things that we see is that 75% of our commercial and industrial users across the continent deal with regular power outages. It's actually a little bit more than 75%, but you get the picture of comparison to firms across the rest of the world. You can see that it's substantially more than even the worst situations that you might find in South Asia or in Latin America or the Caribbean. So as a result of this widespread experience of power outages, there's very high demand for on-site generators. And so these typically are going to be diesel generators that are turned on during those times when either you're experiencing rolling blackouts or when power is out for an indeterminate amount of time. The challenge here is, of course, because you're relying on diesel energy, you have to have a supply of diesel. So if you don't have that supply of diesel, your generator does not work. And so again, this is where the inherent superiority of solar as at least a backstop or fail-safe measure for power supply becomes really apparent. One of the other things to note is that, as Rongai also showed, it's not enough to have resource wealth, right? Even though there are considerable natural gas reserves, even though there is the best solar irradiation on the continent, even though the oil supply is available, even though we have the capacity for hydroelectric power generation, all of these, numerous carbon safe methods of generation. The reason why we're not able to actually deploy that energy in those contexts is because of a significant financing gap. And so when we say financing gap, we're really talking about $30 billion worth of financing that is not available. That's not available either via internal markets and internal lending, or available via developmental aid or direct foreign investment from across the world. So there are many reasons for why this lack of liquidity is available. One is just an inherent nature of the way that the economy is set up. I think there are a number of countries that have forex regimes and currency pegs that make it prohibitive for attracting the foreign capital that's necessary. Others, it's a level of debt monetization that the IMF and Paris Club lenders are uncomfortable with. Others, it's simply the general business environment from the perspective of foreign equity or private equity in general is just not favorable. And the opportunity cost of investing in that particular country is very high when you can have an easier time investing in the US or in Singapore, et cetera. So as mentioned again, a majority of the continent is still rural, and the electricity access in rural areas is still very limited. And there are some areas where we're seeing substantive change, but across the board, the level of change, one would argue, is not sufficient to address the challenges that are mentioned before in terms of the reality of load shedding, the reality of rolling blackouts and power outages. So there is a major supply gap. I think on average, we're looking at something like national grids being able to supply 55% or so of the actual demand at any given day. So we see regular rolling blackouts, regular load shedding across the entire continent. Number of factors that drive this, like I said, are going to vary. Everything from monetary factors, which include interest rates being too high, schemes of debt monetization that are creating hyperinflation, which makes it very difficult to move foreign currency into and out of the country when it comes to making the investment and repatriating profits. There's too much of the currency risk or the inflationary risk there. There are business environments that are not friendly to businesses. So a lot of the times, for example, for working with governments to create utility scale solar for a number of countries, they require a tender process. So instead of soliciting bids to government because you're able to, as an entrepreneur, see an opportunity and make a direct investment with the government, many governments actually force you to go through a tender process, and so they accept tenders from a number of different bids. There are many different good reasons why you might want to do that, but one of the negative effects, given particularly the reputation of corruption, one of the negative effects that we see regularly, we as an entrepreneurs that attempt to do these development projects, that we see regularly, especially coming from a Western perspective or bringing Western capital in to invest, is that research may be done, geotechnical engineering may be done, site design may be done, all of those things may be done and submitted to the government as part of that tender process. But then what they will do is then provide that information to an insider, a political insider, who will then win the tender. So they'll take all of the technical expertise that was brought in by foreign investors to actually pursue the project, and then sort of resort to nepotistic paths to then reward projects to individuals that may not actually have the expertise to execute, but they are political insiders. And this is not an isolated type of thing. This is something that happens quite regularly. And again, it's part of the sort of it's part of the wide range of different behaviors and activities that are seen within these countries that would discourage direct foreign investment and create and exacerbate the financing gap. I think one of the other big limiting factors is the level of debt overhang that a number of African countries have. This level of debt overhang, meaning that being seriously in the rears makes it difficult to obtain new loans for financing infrastructure projects. So all of these things push a number of these governments to resort to the private market almost entirely to drive and supply or fill the supply gap that's happening. So on the flip side of all sort of the barriers that I've mentioned, we're also starting to see a lot of those barriers being dropped in very dramatic ways. So for example, South Africa has essentially allowed the development of solar projects up to 100 megawatts without a license at all. So making it incredibly easy to actually create very large scale utility scale solar plants without having to deal with a lot of the regulatory challenges that you would typically run into. And this is partly an artifact of the fact that many of the countries within the SADC region buy power from South Africa. And Eskom in South Africa has significant supply gaps themselves, which require load shedding in order to meet those energy export requirements. So it's kind of a game of robbing Peter to pay Paul from the standpoint of electricity provision within that network that's tied and dependent on Eskom power production in South Africa. So now I'm going to dig into the relationship between GDP and electricity consumption and availability. So we've talked very broadly about the macro challenges. We've talked also about some of the specific challenges on the ground. So I want to then start to explore, what does this mean in terms of GDP growth, and what is this relationship between the availability of power and the consumption of power and GDP? So what we've seen, particularly in Africa, is that there's a fairly linear relationship between GDP per capita as well as access to electricity. And I want to make a very clear distinction between access to electricity and the consumption of electricity, because there's an unclear, from the research perspective, an unclear unidirectional relationship between access and consumption. In other words, the more access you have, the more that you're likely to consume, the more that you consume, the more there's demand for access, et cetera. So there's kind of like a virtuous relationship. So here we're being very precise when we say that there's a relationship between access and GDP per capita. So we also do see a linear relationship between GDP per capita and consumption. And this relationship is actually more tightly linear in terms of GDP per capita and consumption. But again, as I said before, the directionality of the relationship between, whether it's consumption that drives more access, or whether it's access that drives more consumption. To a certain extent, though, in light of the high level macro picture that we've been provided earlier, it almost doesn't matter in my perspective whether, what is the chicken or the egg in this situation, because at the end of the day, we see that the level of consumption is far below what we would expect for even a middle income type of country. Excuse me. So I think that just thinking about it from a benchmark perspective is that we're going to want to see our level of consumption start to really match and reach certain levels in order to really start to see the knock-on effect of the impact to actual GDP overall, and then GDP per capita. Now, one thing that I do want to mention about this relationship between GDP per capita and electricity consumption is that linear relationship is true for countries in more developing state. In countries that are much more mature in terms of their economies, so you see that the growth potential. So if you think about growth as sort of like as an S curve, where it's kind of when you're at the low end of the development index, your growth levels are fairly flat. If you're sort of in that middle, so you're sort of starting to emerge as a developing country, you're middle income, your growth rates are much more in that hockey stick pattern. And then as you get to a more mature state, the growth starts to tail off again, and high levels of growth become less and less achievable. So at that point at the top of the curve, you do start to see a divergence between the GDP growth and electricity use. So part of that is due to a number of factors. One of the things that we can think about is, as a country develops and as it matures, it moves in general from more rural to more urban, so more agricultural. And then there's that middle phase of like, there's a lot of manufacturing and a lot of heavy industrial type of purposes, because you're able to deploy lots of labor at a lower cost to be able to, to deploy a lot of man and woman power to be able to crank out industrial processes. As you get into more mature economies, though, labor productivity starts to spike, right? The deployment of technology, which allows for a lot of scaling of human behavior, automation, things like that, allow for the same levels of productivity with fewer people. And it's really individuals doing work that drives the electricity consumption. So if you have fewer individuals doing work, you start to push your electricity consumption upstream. So upstream in terms of the value chain of your industry. So now you have people working on computers as opposed to people working in factories. So your computer, your workstation, your work site, you're not consuming as much electricity, but there's more electricity upstream in terms of the generation of your energy source, and the provision of, or the creation of the components that go into the electronics that you use, et cetera. So most of that production is in developing countries. And so you can kind of see how those consumptive activities start to get pushed down the value chain away from the end use as an economy matures. And so that's why you see that relationship between GDP growth and electricity consumption start to flatten with more mature economies. And so again, if we also consider carbon emissions within this whole picture, we have kind of a triangular relationship between growth, access and consumption, and carbon emissions, where as consumption and access grows and economic growth continues to grow, you start to see more carbon emissions. And then you see the bidirectional relationship between economic growth, again, and electricity access and consumption. Okay, so what does this all mean in terms of investing in African energy supply, right? We've created a picture here of the situation of the gaps of electricity availability and what that means in terms of the actual growth potential of the continent and our ability to achieve some of the trade goals that we've established for ourselves for 2030 and for 2063. There exists now an opportunity, right? This $30 billion financing gap is that opportunity. The actual projects themselves, from an independent power production perspective, are quite lucrative. There are barriers to entry. There are barriers to the development of this process in the form of the very high capex costs. The levelized cost of electricity is quite low when it comes to renewable energy sources. And in fact, it's lower than coal, it's lower than crude oil when you talk about just the cost of electricity itself. The challenge behind that cost, though, is the cost of actually standing up that power source. And so that is really where the financing challenge really comes, and the need to be creative around how we create those financial models and how we create the financing structures to ensure the necessary flow of capital to actually finance these projects. So the opportunities that we focus on with ASOBA and that others focus on, Tony focuses on, for example, we look at West Africa as one particular group, and we look at Southern Africa or the SADC region as another one, right? And part of that is because you have an African pole in each of these areas. And by pole, I mean economic pole. In terms of the top 4 largest economies on the continent, West Africa has Nigeria. In terms of the top 4, Southern Africa has South Africa, and each of those countries anchors the energy use and the industrial production of those regions. So that's really where the focus areas and the investment opportunities are really going to lie in terms of being able to create these utility scale projects or to work with industrial or commercial entities to provide on-site solar, whether it's rooftop or whether it's ground mounted, to actually engage with the creation of additional supply within the grid system. And it doesn't have to be built onto the grid itself. These can be either private grids or this can be on-site off-grid energy production. And part of the benefit there is by taking mines, by taking these large industrial users off of the grid and onto their own grids, you free up a lot more electricity supply for smaller business, which makes then the cost of electricity less prohibitive to the creation of small business. And for any mature economy, Europe, United States, East Asia, Southeast Asia, right? It's the small business growth that is the driver for per capita income. It's the driver for income in households across the board, because the vast majority of workers work in small businesses. So the lower the cost of access to electricity for these small businesses, the more money that can be spent on hiring people, on purchasing supplies for actually engaging within the marketplace. And so again, I referenced why renewables is that you see the levelized cost of electricity plummeting significantly with photovoltaic as well as concentrated solar power. The drop in cost is less dramatic with wind, and certainly the supply of electricity from the standpoint of solar availability, particularly in Southern Africa, is extreme. I mean, Namibia is the best country on the planet in terms of solar irradiation. I mean, and given the fact that there's so much desert, there's so much land that is frankly not usable for urban purposes. right? That's a lot of land that's available to use to capture sun energy and to pipe it across the region. So let's invest in those kinds of things. So I don't know, Tony, do you want to talk about the environment that you see in West Africa?
Yeah, thanks for that. That was actually quite interesting. And I know there's a couple of questions here, and what I want to do, make sure that we do address them. So I'm just going to be very, very brief in here. So all I wanted to say is actually when we look at the renewable energy investment in the continent, you know, for the last decade, 2 decades, right? So you have to figure that in front of you. So besides Central Africa, that's seriously lacking behind all the other regions. So obviously there's 5 regions in Africa. So you can see that the other region where there seems to be a big opportunity, it's West Africa, isn't it? Right? Because if you're looking at what has been spent over the last, can you hear me? Yeah.
Yes.
Okay, that's fine. Okay. So my laptop. Yeah. So when we look at what has been invested, so we're talking about what 4.4 billion that has been invested for the last 2 decades. And if you look at it, like I say, it's lagging way behind North Africa, East Africa, and Southern Africa. But West Africa, like I say, that's the most populated region of the continent, right? Just by looking at that, you understand obviously what we're talking about in terms of opportunity. So that's what I'm saying. Clearly, the opportunity is there, and we need people to tap into that. I'm not going to come back to the reason as to why renewables, because you already mentioned that. Clearly, it's cheaper. We demonstrated that. One thing that we should say, it's faster to build. If you're looking at 5-10 megawatt solar plant, everything is done according to plan. You know, you're certainly looking at less than 2 years to make it happen. So the same thing with gas, may not be as fast, right? Although obviously gas, like I said, should not be discouraged, definitely not. But it's getting faster and also cleaner, right? So I don't think as we're talking today, there is a cleaner fuel than clean energy. Right? So that clearly will not be the case. So yeah, so for those reasons, clearly there's a good and strong case now for the continent to move massively into renewables, and also the world to move massively into renewables. So what we're going to do right now, like I say, because we have about 12 minutes just to conclude the conversation. By the way, people joining, just want to let you know that this is our first conversation, right? So we are expecting to have more webinars like that we're going to roll out, which is the What is Best for Africa WEBA. That's how we call it, this specific webinar. It's all about looking at the opportunities and the challenges that the continent facing, in the background of, in the backdrop of the geopolitical event that is happening. And then talking about geopolitical event, this is a perfect a perfect scenario with what is happening, obviously in East of Europe, right? So that's just to give you an understanding. Now, let me dive into the question, because there's a few questions there, and I definitely want to make sure that I get us to address it. So the first question, right, that's for you, Rongai. So the question is, how serious do electricity supply problem have to be in order to constitute a serious break on economic growth, according to you? A brilliant question, by the way.
Yeah, I mean, bottom line is everything is fired by electricity energy. I mean, Shinji has over-dramatized that, trying to share on how electricity is actually utilized. So it's not really a question of proportions. Bottom line, we just need energy to fire the economy, right? And if you want to do a zero-sum game, you look at, say, the manufacturing sector. And I'll give a very interesting context where I come from. I come from Zimbabwe. You have someone who has already placed an order, and it's confirmed it's an exportable order, and it's time bound. And you got raw materials running through a conveyor belt. And this could be talc. You're trying to make, say, a detergent or a soap, and power goes off. It all just, it was in a melt format, but it just dries up. You can imagine the loss you have incurred, right? Unless you've got sufficient supplies of backup, which is also very costly anyway. You have lost the order already. And Europe is saying, no, unreliable order. Let's not take orders from Zimbabwe anymore. That's the risk you sit on. So we don't want people to politicize the fact that we can make do with 30-40% supply. Let's have 100% and let's play around with instability around a 5 to 10% range of not having the energy. We need it, bottom line. You can imagine you're actually in a surgery and someone is operating on you and there's no power. You lose a life.
Yeah. Well,
that's how dire it is. Yeah.
We're laughing, but it happens. It happened in many places, actually. So definitely, I know that in our case, as like you, Shingi, obviously we are working on commercial industrial applications. So in the continent, over the last few months, I definitely have had the opportunity to look at a couple of hospital places, and clearly what you see, what's happening there, it's definitely not laughing stock. Yeah, sorry, I didn't want to stop you, but let me jump in the second question, because obviously I'm mindful of the time. I just want to make sure that we address them. They're not all of them, but a very good question. So the second question, I think it's Mabel, who by the way, Mabel, thanks for asking that. You say that are the analysis that we've been doing, are they at the national level or sub-national level, meaning that province, district for the countries? At what level are we sitting in terms of those analyses?
I'm looking at national level. Unfortunately, the challenge that we also face is, unlike the United States, which has a wealth of data at the state, even at the local and sometimes at the city level, in terms of very organized or reasonably organized databases. That doesn't exist universally across different countries or even within countries, at least where I work in Southern Africa.
Excellent. Good. Okay, I think it will be the same for Rongai. So another question for you: what can be learned from the development experience of countries that have successfully invested into electrification? So is there any key lesson that we can learn from them?
Yeah. From a policy perspective, for sure. I think that the biggest, the places where it has been easiest, at least so far, to develop have been countries that have minimal foreign exchange controls. So Botswana is, I would say, in my experience, the easiest country to operate in. It's the cost and the speed of actually setting up an entity is the same as it is in the United States. I think I paid, in the United States, you can set up an LLC for, say, $250. And you get turnaround within 3 or 4 days. It's the same thing in maybe it's about a week. You spend about $380 to get an actual business formed, right? And I think that's like the critical thing, is just to be able to just do basic administrative things in relatively fast time periods without actually having to be in the country. That is a game changer for so many countries, is just doing those kinds of small changes. I think another thing that makes it really easy is the relaxation of foreign exchange controls. So again, Botswana is a great example. Being able to bring in US dollars without having to convert. I can just set up a USD account. I can operate in USDs. There are no requirements for me to trade in local currency. There's no exchange rate that I have to pay. So for example, Zimbabwe is nightmarish to deal with because they peg their currency at 100% of its market rate in terms of exchange rate. To bring US dollars, they force you to exchange those dollars into Zim dollars if you're not an exporter. And as a result, you lose 50% of your capital value just bringing dollars into the country, right? So other countries have various degrees of less difficulty bringing Forex in, but they still introduce those kinds of barriers that make it prohibitive to bring large amounts of capital into the country to make investments. So I would say that the countries that are successful are countries that remove those specific barriers. And the great thing is that these are very small changes to make. They don't require transformative effects within government or policy.
Yeah, I think I have a couple of comments here. So we're 5 minutes. Let's aim to squeeze them, because that's very good. So, Rongai, to what degree has electrification prolonged or accelerated economic growth, mainly in Africa economies? So I don't know whether you were able to get it. Do you want me to repeat?
Yeah, you might have to repeat. I'd love
to what degree electrification has sort of slowed down or accelerated economic growth in Africa economies? So from your understanding, I think we kind of a little bit answered to that, but maybe you might want to repeat very quickly.
Yeah. I guess what is very critical is just to appreciate that we can't do without energy. Shingi has dramatized the extent to which energy is got a correlation with GDP per capita. So you probably find that countries which have got stable access and supply of energy have very high GDP per capita. So we can't condense that thesis. And the bottom line is then to say, what do we need to do to have reliable energy so that we don't destabilize our production, we don't destabilize our economic growth potential? And it's a fallacy. We talk about the Africa Continental Free Trade Area, and at the same time, I talk about the energy deficit we have in the continent, and no one seems to be talking a lot about that. It's worrisome because we want to get to Agenda 2063, the Africa we want. We won't get there unless we address that.
Yeah, that's fine. So excellent. Thanks for that. So let me take in the last comment before we wrap up. So that's actually Mabel, who's actually providing another comment. She's saying that talking about West Africa, and in fact, what she's saying could be generalized to Africa. The problem is getting social economic data that is quite recent and more granular, right? Mm. So basically having access to data that you can trust coming from the ground, it's according to her a problem. So I would say this is clearly not just focusing to West Africa. So this is something we regularly, pretty much all of us are encountering. Mm-hmm. So, but like I usually say, so when you see such an opportunity, what does that mean? Well, I've already given the answer. So when you see such a challenge, what does it mean? It means that there's an opportunity, right? And that's how I always would like to invite all my colleagues present here. If you see something that can't be fixed, just think about, okay, what about if I'm actually stepping up and looking at fixing it myself, right? So, or at least provide some kind of information. So that's how I want us to start thinking about. For example, I've been working with this company, PV Data, that come up with a software that's pretty cool, right? Because it allows you to do a solar assessment in actually 30 seconds, where you're able to get the financial analysis, the design, but also the environmental, social, and economic data of a country, all in 30 seconds. You enter the input that you want on the project that you're doing, and then you have all of that. And that kind of information, I would say, this is something that we usually take like 6 months, even more, to gather. So that's an example of innovation that's happening. So what I've done is I've pasted the link on the chat there. So definitely you guys go there, download the software if you haven't done it yet. Run with that. Obviously, later on, if you find that you want to get involved and get a plan, not a problem. And feel free to reach out to us, because I think we have a special discount code that could be useful for you. But that's what I would say. Just the time for me to bring the conversation to a close. I know there weren't that many people, many of us today. That's fine. That's the first conversation we're doing. What is best for Africa? So the Weber call. We haven't done one for a little while, and at least we expect that we're hoping that you've been able to understand what is really the correlation between electricity access and also GDP growth, and that's like Shingia has mentioned. For developing country, that relationship is linear. Basically, it means that as long as we don't have electricity access, so we're going to be struggling basically to get the growth that we want into the continent. And that has to be very, very clear to everybody and anybody. So, and that's what we think of bringing this conversation to the people can understand. Then many other topics that we touch on that we can explore even more. And that's what we're going to do in the next coming weeks. But I'm hoping that at least you had a chance to get an idea of how this can be impacted and how that can impact the continent, and also get an idea of what needs to be done to get the Africa that we want in 2063. 30 seconds to conclude, Ronga, Shingi, and after that, wrap up.
Well, I have nothing to add. I'm just happy that we've gotten off on a very good note, and we're available through the Secretariat. We can always be available to give you even additional information on areas we might not have been able to clarify. And thanks a lot, guys. This has been a very powerful platform.
Excellent. Shingi.
Yeah, just thanks for having me on, Tony. This has been fun to talk through this. For those that want to get in touch and talk more, my email address is shingai@asoba.co. You can also reach me on Twitter @asobadefi. Happy to take the conversation further, and I'm looking forward to participating in more of these WEBA discussions going forward.
Excellent. Guys, it was a pleasure for me to have you. So I have also my details if you want to reach out to me on LinkedIn, or you can definitely reach out to Tony at Renewables in Africa. Like I say, so we're gonna have more conversation just like that. I know it's a late evening call, but hey guys, it's a different approach, right? So you may want to make sure that you log into that, listen to that, and then go and have a beautiful sleep. Great to have you, and then I wish you a very good rest of the week. And this is a recorded session. I'm sure you're going to be able to watch that as well later. So have a great time, guys. Bye-bye.
Bye-bye.
And thank you for connecting.